So, Francisco, President Trump seems to key in on the idea now that maybe this isn't a boon for less of a tax on American consumers and more of a problem for an industry. Do you think that the U.S. is going to sort of join with Russia and Saudi Arabia and try and get some kind of deal done?
Well, I think it's very difficult for the U.S. to join the OPEC plus discussions simply because the industry is so fragmented here. And I'm not really sure how the government would manage that and what kind of authority you would have at the different state and federal levels. But I think what's clear is that President Trump is trying to bring both Russia and Saudi back to the table. And I think the best chance to do this is to give them both an opportunity to save face after the failed meeting a few weeks ago in Vienna, and encourage them from the U.S. side to sit down and negotiate. So I don't think the U.S. is going to actively be cutting production as part of an agreement. I do think the U.S., however, will see a big decline in production because the economics are horrible right now for most of the industry, Alex.
Well, that's exactly right. And so I guess my question is, what's best? Is it best to just let the market play out and then get the bankruptcies, get the production shut-ins because oil prices are so low? Or is it better to sort of just try and stem the tide a little bit and help support supply?
I think it's better to stem the tide a little bit from my perspective because the danger is if we let a lot of these companies across the U.S. go bankrupt, when demand comes back, we're gonna snap back the other side in a pretty sharp way, and I think that won't be good neither for the U.S. or for the world. And I think even for Saudi Arabia, all this volatility is not particularly good. So I think ultimately it'd be better if we can actually reduce the number of companies filing for bankruptcy here. But I do think it's inevitable that we'll see a high degree of consolidation at this point. Because there's just way too many players and way too many weak balance sheets right now in the industry.
Well, fair, but no matter what they do, that has nothing to do with the amount of demand that we're losing in the demand shock. Can you give me a sense of your models and sort of what kind of supply shut-ins we need to see to help the market even by $5–10?
Well, that's a great question, Alex. We've talked a lot about supply, but the real issue here is demand. We think demand in April will be down by 17 million barrels a day. For the quarter, that's about 12 million barrels a day, assuming some kind of recovery into the month of June. But we've never seen anything like this, and frankly, I mean the inventory picture is gonna look pretty horrible within a few months.